Welcome traders. It is Sunday the 18th of December. I'm recording this for the week commencing Monday the 19th of December. So quickly having a look at the economic calendar this week. So there are some public holidays on next Friday, and obviously next weekend is going to be Christmas. So let's just see what the big things are. So really focusing on what's going to come out of the Bank of Japan with regards to what's going to impact the yen pairs to see how their inflation is. So I think it's a really good idea just to see what's happening with the rates of inflation in other countries. That'll give us a really good sense of, are they calming down? Are they staying the same? And that's a really good indication for what is likely to happen in the coming month, I guess. And so that would be Canada will give us some clues on there. Really also just watching to see how inflation is happening in the US. So right now, everything appears to be on the mend. The question is what's happening with regards to recession more so than inflation. Inflation seems to be slowing down, but it doesn't mean we're out of the woods just yet. So all the focus really on things like anywhere where there could be signs of a recession coming, where there's a slowdown in terms of orders. That's really what most of the focus is going to be on. Okay, that being said, let's go and look at the charts. Okay, so we'll start off with the dollar index. So it's slowing down a little bit. I would say we're starting to see some bullish divergence coming in. So this is important because the implication here is that we started to slow down, and there is a possibility that the dollar is going to, I think there's a good chance that it's going to continue to strengthen this week, and then we'll start to see moves to the upside there. The question is this going to be the beginning of a move back up to the old highs? We're going to see that happen. It's a possibility. In order for that to be the case, obviously I want to see a nice little bullish green monthly candle there. I don't feel like we've had a deep enough correction. I feel like we should have come back down towards 100. But that being said, we definitely are starting to slow down a little bit here, so we'll see how that goes. So this week, my expectation is to see a slightly stronger US dollar. On the euro dollar, this trend is a very nice, happy, healthy one, but you'll notice that the MACD's gone flat. So momentum is effectively stagnant, and we're in a really good area for this to do at least a weekly retracement. There's back down to level of support. So we might find euro dollar hits back down to 103.70, and that would be the case. If we see that's going to be the case, and certainly sterling as well, with a very bearish candle here off the 50-period moving average, high probability here that it's going to head down at least towards 1.2, 1.19. So we're going to see that strengthening of that US dollar. You can see the Australian dollar here actually starting to just capitulate. Bearish candle here off a level of support versus resistance. High probability we're going to possibly even come down as far as 0.65. So very strong signs, at least, that dollar is going to be sort of coming back in. We've got a Kiwi, which has been relatively strong. It's got some indecision candles here, but it's had a really strong run on the weekly. It does need a bit of a retracement. So my expectation for this is to see it come back down to 0.62. Dollar yen is going to be the interesting one as well. It's in an uptrend technically on the daily. It's still, it's similar to that dollar. It's in an area where, yes, it could decide if we're going to see another series of moves or go back up to these old highs. This is kind of the place where it's going to be doing that. So it's going to be interesting between now and January. I'm not convinced yet whether I'll be doing videos between Christmas and New Year's. I'll probably take a break. So it'll be interesting to see where we are when we have that first video in January to see where the markets have got to. But for now, and especially with the BOJ stuff coming out, I want to see what that happens here. Do they continue to push it down? Do we see a bit of a break from what we've seen, or does it go back to strengthening? So this level here is going to be quite significant across all those yen pairs as well. Dollar Swissy looks like that's coming back into an area of resistance. I don't really expect much from this, so we'll see if it finds resistance or manages to start or becomes bullish again. Dollar CAD, on the other hand, does look as though it's going to continue to push back up to these old highs. So there could be some good trading opportunities on the CAD pairs before we get to Christmas. As a general rule, doesn't seem like a good idea to trade between Christmas and New Year's. The market loses a lot of its volume. It doesn't really do much, and it doesn't appear to be beneficial. It's a really good idea to probably just take a break and spend some time upskilling and relaxing, spending time with loved ones, kind of enjoy your life a bit before coming back into the markets and kicking off with a lot more enthusiasm in the first week of January. Let's have a look here at the gold, price of gold. So overall, this is a really nice setup here to see gold go back up, but 1800 could potentially be a bit of a problem for it. You can see the weekly candles here being undecided at a level of resistance. So it doesn't mean we're necessarily going to break free of this. We could actually find that gold hits lower, especially if we get that stronger dollar. But I'm just saying that on a daily perspective, this looks like it's going to right out the gate possibly try and hit 1800 again. But if we see another sign of failure here, we could see that by the end of the week, it started to head lower. Silver is looking really nice and strong. This is a great bullish setup. So I would expect the same thing from here to see if it can work its way back up to 24. If it fails and we end up breaking the low of this, then we're very much more likely to see this have a deeper correction back down to 22, or even a little bit further down, back down towards $20, something 20.50, 20.75. Let's have a look at copper. Copper's already struggling here as well. That's not looking strong. That's most likely going to head lower. Natural gas is just a mess. I'd stay away from it, but doesn't look strong. Crude oils. So crude oils have been generally heading a lot lower. They've come back in, found resistance, and appear to be continuing lower. Most of the indicators are also bearish. So there's some buyers stepping in. So you've got a little bit of a sort of, for example, 60-40 kind of weighting over 60% sellers, but there's definitely some buyers stepping back in. So it might continue down, and we'll see if it finds some support here. Brent crude as well, expecting that to continue to head a little bit lower for now. Let's have a look at wheat. Wheat is generally still very weak and potentially going to head low. No signs of anything changing there. Coffee, which had a really good recovery or double bottom here, it has to break through that level of resistance before we get that confirmed change. And this doesn't look super strong. But there's signs of a potential attempt to turn around here. So I want to see if we turn around from where we are, go back up and break those highs. Sugar, struggling with resistance. They're really battling with that 20 mark. And so it's also been range bound for a while. So we could see it, if it breaks last week's low, we could see it coming back down towards the bottom of that range. Cotton is just a mess at this point in time. It's trying to head higher, but it's giving some mixed signals. I'm going to stay away from that at the moment. Moving on to the global indices. So the most significant thing to take away from this is that we have these very strong bearish, bearish engulfing candles across the major US indices, the S&P and the Nasdaq. All of them possess a very strong bearish engulfing candle. The implication generally, or let's say 80 or 90% of the time when we get a candle like this in this kind of a situation, the implication is the following week is going to head much lower, potentially the same kind of distance. So another implication here is that we're going to see the US markets move down to the next major support levels. So that aside, I was looking for a correction to where price is at the moment into these major levels. A lot of them have come back into a major support level or are close to it. And this is where I was expecting the markets to head back down to find support. I was looking for that to be the case. However, this big bearish engulfing candle is more bearish than I would have liked. The implication here is that the market is doing a bit of a correction here, but there's also a bit of a factor of that dollar coming back a bit stronger. So I think that there is a fair chance to say that the markets might be more bearish this week, surprisingly bearish this week, even though I would say that we were starting to recover. So alternatively, should the markets shrug this off, shrug this very bearish signal off, price comes down, finds support in these areas, and then closes to the upside, that would be an amazing sign of strength, because we would have a very bearish signal on the market which shrug it off. That would be the implication for that would be that the market is actually on its way to recovering. Although I'm really going to focus mostly on just a week-by-week basis. So for now, my expectation is that the markets are more likely to head down to the next major support levels at the very least than they are to be able to recover. If they shrug it off, that's great, but this is such a bearish engulfing signal that I'm leaning towards it being that there might be something significant in this. We'll see. I'm not going to say the sky is falling, but I want to see how the market reacts to this and if it manages to recover by Friday is a big thing. Looking at the Russell 2000, that's also very bearish. And when we look at the FTSE, for example, which is at its all-time highs here, that's fine for this to be able to come back down towards these lows, because we could be range bound or we could be building up to a consolidation breakout. So all of that makes sense when it gets up to those highs. When we look at the DAX, this is again where I'd love to see this come back into this, back into this previous high, this level of support, find support here, and then work its way back up. So this is something that I was expecting in all the US ones as well. They'd break above the 50-period moving average, come back down, find support in that area, and then continue upwards. But this bearish signal is more bearish than it should be given those signals. So that's why I'm saying this week I'm prepared for the markets to head lower. That kind of a bearish signal like that should not have occurred if the market was safely back in its way to recovery. We've got the ASX out of Australia, also really good place for it to find support, but if the rest of the markets head low, we could break through that, come down to the next support level. And the Nikkei as well, also forming a bit of a bearish. It's still within this range, hasn't broken out of it. So all of that just implies that the markets at this time are either going to just take a break until the new year, or they're just not ready to go up to those new highs just yet. So let's move on to equities. So Apple, this is interesting. This is definitely something you want to pay attention to. So this is forming a bearish breakout pattern that has been, and this bearish engulfing candle has confirmed it. We've come back down here. We're closing it. MACD looks like it's starting to get ready to go lower. And actually, it appears as though based off this that we might see this, if this pattern holds, we are likely to break out. And if we do this, we're going to head down towards possibly even 100 down here. Quite significant. At the very least 120, if not a lot further. And that, psychologically, just think about that, having Apple have a deeper correction. That is significant. It would work its way down to the 50-period moving average. Psychologically, that is and fundamentally, that's a signal. That's a big thing if that happens. Is there a possibility that might not happen? It is, but we would need the candle to turn around exactly where it is now, finish. We need to break above these highs. Once we break above these highs, that breaks that pattern that's building up. That's a bearish breakout pattern, and they would do it. But that would have to happen almost immediately. So this week would have to be an incredibly bullish week to counter the very bearish signals that it has produced on the weekly. And that can happen. It's just not common for it to do that. It's much more common, given all the signals we're getting here, that the markets are preparing to head lower. AT&T coming down to these levels here, not terrible, not in terrible shape. ARC Innovation is still heading lower. There's no signs of this turning around at this time. That does look very much going to continue down. Let's look at Glencore. Glencore's at a level down here and also back up to 519 where it could still find support within this. The indicators look nice and bullish. There's no real signs of bearishness here, so I do for now expect this this trend to continue, but with possible moves lower first before it goes back up. Looking at Tesco's, that is finding resistance at this area on a monthly, where it's found resistance before and therefore might come down towards those previous highs and lows. And then we've got Amex. Very bearish reaction there. I expect us to attempt to come back down to this level at 134. If this is, I'm just basically going to just go with the worst case scenario at this time, and anything better than that is obviously a good sign. So meaning that my expectation for the coming week, and I'm really only looking at it between now and next week, if the market does something amazing, I'm going to make sure I do a video. But if it doesn't, if it just follows through on this and there's nothing else to report, I might just skip next week and just come back in January. But yeah, this is what I'm looking at. For now, a lot of these were attempting to change their trend to the upside. And they've been overdue for a bit of a correction back down to find support to produce a higher low. And that's really what I was expecting. But these bearish candles have sort of taken that and said, look, it's possible you're not going to get that. So yeah, we're back up at these old highs, and again we might see some of these moves a little bit lower. We've had a really nice recovery, but maybe there's something different that's going to happen in the next 6 months. Could be. Again, we've had a lot of instruments, and I think this is important because we're going to get to Tesla in a moment. A lot of these instruments haven't had incredible recoveries. And now the question is, are they going to maintain those trends and keep continuing? We've seen some of them not really have that. So someone's like Amazon, look at this. This continues to head lower. And unfortunately, it does look as though right now, it also looks as though it's coming back down to 81.50. So that's a bit of a tragedy there. We've got Exxon. And of course, what happens with a lot of those is they may then start to get offload employees. We've seen some of that happening already, and so we might find ourselves maintaining that recession, which is why this week it's not completely crazy to say that we're going to see hints of inflation, recession stuff happening as opposed to inflation. And I don't know if I've said it enough here, but a recession is one of the best ways to cure inflation. So all of these are ugly, but potentially necessary within the overall evolution of life. So having this come back down to these previous highs would make sense here within the existing uptrend. Overall, it looks very healthy, but a move down towards here could also make sense for Exxon. We've got General Motors. This is still within this range and it looks bearish. I expect this to come back down potentially to those previous highs. JP Morgan Chase back down into these highs potentially before managing to recover. Other signs of it look fine. Meaning that it doesn't look like we're still within that bearish trend. Adidas is still within its longer weekly downtrend. I think this should have been able to work its way up to 150. So I'm quite surprised. I want to see this actually break higher and see if it could do that. Meta, this is an interesting one within this area. I still expect this one also to be able to make its way up to 150, but it's also got a similar issue. Morgan Stanley, this looks more bearish than it should at this area. I expect this to come back down into these old highs at the very, very least. NVIDIA that's quite a relatively bearish signal within being that location of under the 50-period moving average, but not necessarily so bearish that it could possibly have to go very far down. Might come back down to 150, back down to the other moving averages. Netflix as well. This is going to be based off that monthly so far. I expect this to move down towards the 250 mark. Let's see. I'll be surprised if the markets manage to just shrug everything off and just have a bullish week that counteracts all the bearish signals. But I'm also not going to pretend that these bearish signals don't exist and that they're not there. So I can see PayPal here testing the lows again. And also it looks bearish. It looks like that's going to keep going lower. So there's no real signs of divergence here. It doesn't look like it's going to bounce. It looks like it's going to break through. We'll see. Spotify is consolidating where it is. It's slowing down, but not much further for it to go. Spider, look at this, it's just absolutely crazy. This one may break to the downside. Doesn't look heavily bearish, but doesn't mean if everybody else has a down week, it won't move lower. Might be able to stay where it is. Let's look at FedEx. FedEx has come back into the moving averages, looking bearish here. So this, at the very least, potentially if we break these lows here, we're heading down to these old highs back up over here about 161. Let's have a look at Tesla. So Tesla is closing just bearishly all the way down. Bearish, 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 everything about it. So far, based off this, it does appear as though we are heading towards the next major support level around about 125. We seem to be under that 50-period moving average, well under it. So far, unless something changes, there's a little bit of bullish divergence creeping in on the daily. So just going to highlight that. I'm going to highlight that there is a bit of that, which might mean that it's going to start to slow down, but nothing about that on the monthly. Everything here looks as though it's going to continue to head back down. I don't really at this time see this as a buying opportunity. If you're monthly, weekly, and daily all in downtrends, it means, generally speaking, you're at least a year or two away. Even if the trend started to change now, you'd have to have the monthly go into an uptrend, and that's going to take 6 to 18 months. Okay, it's going to take a very, very long time. So I don't really see this as a buying opportunity now. I think we're still months away from it. But if I see a bullish signal there, I'll be the first to mention it. Right now, it looks as though it's going to continue to lose value. Let's move on to Vanguard. Vanguard also producing a bearish candle here as well. Also looks like it might be doing a bit of an inverse head and shoulders, but at the very least, potentially heading back down to 340 here. It depends on the degree of the bearishness. What I do find interesting, again, is bonds have not necessarily lost. They've been bearish for a very long time. They still look like they want to keep going up a bit. They're struggling with resistance, but they are looking that way. Eurobonds, not so much. So you can see news came out of ECB this week. Let's just get rid of some of these things. And actually here, it looks very much as though that has impacted. It looks as though that downtrend is still much intact. So we'll see what happens if it comes down towards these levels of support. There is bullish divergence there, so it is slowing down. The question is, how far is it going to go? And let's finish off with crypto. So cryptos did have a really nice breakout and then came back down under this. They're going to be under pressure. There's no doubt that cryptos will be under pressure if equities are under pressure as well. So it's easy enough or simple enough that cryptos are going to continue to head lower or struggle to stay where they are. Should they, for some reason, manage to climb while everything else is falling down, I'll be very surprised. My expectation at this time is that cryptos are under serious pressure and they're going to be heading lower. So this week so far, ladies and gentlemen, does look like this coming week is going to be quite bearish and possibly the news is going to be quite dire. We'll see what it is about that, but I'm going to be prepared for that. If we don't get that, if we manage to get a really bullish recovery, that's amazing. That's a really great sign for the new year. But for now, it's just not a lot. There are some big, heavy sell signals, and I want to be prepared for that. And so, having said that, we've been worse off 6 months ago than we are now. So this could be something that only lasts for another few weeks and then it turns around. This is not necessarily the next 6 months or the next year. Okay. So I want to, on that note, let's just see how the week goes. Be sensible, manage risk appropriately. Don't do anything crazy. Maybe spend some time away from the charts, just observe, spend some time with your loved ones. Also, obviously, next week is going to be Christmas, and for all of you, I want to wish you an amazing season with your loved ones, and hopefully get you to get some rest and relaxation, and so we can kick off the new year all motivated. But that being said, I want to wish you all the best, and I look forward to chatting to you in my next video. Thank you.